As the market is selling off, we're rejecting into this 45.80, 45.70 zone. And when we go into like yesterday's session, we are gapping down. We are gapping down from yesterday's closing point, right? So seeing that, that's where my notes kind of come in. That's where my thought process comes in. Now, with my thought process, I start having scenarios. So I go, okay, today's tough to identify what will happen. Here are scenarios I have. Now, I like to go into days with scenarios, and then I like to let price confirm the story or confirm the scenarios. So number one, market overreacted, and on open, we reclaim 45.80 and new buyers step in. If this happens, that means I will go long. So just to give you guys an understanding of what I'm kind of talking about here, let's go to a larger time frame, right? So this is what I was saying. See, pre-market was selling off. We start coming into 45.80. That area is looking weak. We start rejecting. So my first scenario is we open up, buyers are able to hold. They're able to reclaim this area. This is an aggressive or overly sold sell-off, and we reclaim this area into maybe 4,600. That's scenario number one, right? Scenario number two, market sells off hard on the open. I'm not a fan of this. Hard to read or trade this, but this is a possibility where right on the open, the market just starts selling off and starts breaking every single level I have. Now, if that happens, I wasn't ready for that type of trade just because we already gapped down. Number three, market pauses, takes a break before next leg down. That is kind of the third scenario. And I was like, okay, there's a possibility of this happening. And if this happens, I'm comfortable with it. I played it in my head. I have a strong idea of this, right? Now, once again, I wrote down, let market open, confirm the story, let order flow price tell you by paying attention to clues. If you can't read it, stay cash. So now, once again, this is everything I'm paying attention to pre-market. Now, what happens? Where is my first trade of the day? Let's just kind of puzzle things together, right? Let's go here and like get a good understanding of today. So here's the trade that, essentially I made money on. I made 48 grand on one trade, made 50%, had a 4R trade. Continuation sell-off was my trade, right? So when I go to this trade, how much did I invest or use? I used about $90,000. Made 50% on this particular trade, as you guys can see right here. Traded close to 900 contracts, right? Risked 11,000. This is what I want to focus on. Forget the 90 grand, whatever you guys see in the thumbnail, or $48,000, whatever it is. Doesn't matter, right? What matters is what did Umar risk on this particular trade, right? Because I could have risked $100,000 on this trade and I made 48,000. Now that doesn't make it a good trade. That makes it a terrible trade. So every time you see any trades that you take or any trader on YouTube, social media takes, first question you should have is to understand how much did this person risk and where did they put their risk levels? Very important to understand. And once you understand risk levels, you'll understand to pay attention to R multiples. So basically I made about 4.2 R. So I made 4.2 times what I risked on this particular trade, right? And based on my cash invested, about 50%, right? So let's go through first the trade. So what happens is I get a short on the day. I do really, really well. And then throughout the day, as you guys can see, I just try to catch the bottom, right? So I'll go into that trade, the big trade, right? Just to give you guys an idea, right? So my short kicks in here. I short, I cover. This is where my short comes in. And I'll show you guys why I took the short trade, right? And then what happens after is after I take that first trade at 10:40 a.m. Eastern time, right? I start trying to go long on the market over and over and over again. Right here, I start trying to go long and catch a bottom when the market is still selling off. This happens a lot when you become biased, when emotions play a role, or maybe you don't have a good read on the market, or even sometimes it can happen from having a big trade. So because I had a big opening trade, now I'm like, okay, well, if I am able to catch the bottom, I'll be able to make a lot more money. That's where this biasness kicked in. But before we go into that a little bit deeper, let's go back into this trade. What happened here? So as I mentioned, market opens up, right? I have the three scenarios laid out, and obviously we can see what happened. Market sold off. So my main scenario that actually happened is when market opened up, we sold off really, really hard. and we started recovering. Now, we started breaking certain levels where stops were getting taken out. Market flushed really hard on the first few minutes. Once that happened, I saw stops getting taken out. Once the stops got taken out, we went back into retesting the 45.70 area. This is one of the same areas I was watching pre-market. Same areas where we had a hard time breaking out from. When we broke out, we started fading into that area again. Now, just because we have areas, just because we have levels, doesn't mean we trade them. Our job as traders is when we have these levels, guys, we want to be able to read who is in control. Are buyers in control? Are sellers in control? Who is more aggressive, right? Are new buyers stepping in this area? Are stops getting taken out? Like, what is the storyline that is happening here? So what was the storyline, or what was I seeing during this time? So here we have a footprint chart, and just before you guys comment down below, I owe you guys a footprint chart because of the last video. So I will be making a footprint chart in the next couple of days, and that should be coming up very, very shortly. So, and with that being said, if you guys can give this video a thumbs up, I would highly appreciate that. And yeah, so let's go back into this video. So once again, if you guys don't understand what footprint charts are, I am going to make a very extensive, deep video for you guys this weekend, right? So now when we go here, this is what I see. So let's just kind of see on the open. This is 9:30 a.m. Market opens. We get extreme negative delta. We're getting extreme selling going on, a lot of selling pressure. Obviously, that's why on the first 5 minutes, we see a heavy, heavy sell-off in the market. So market opens up. You can see first 5 minutes, we sell off. Second 5 minutes, obviously, market starts recovering. Now, what I start paying attention to is I start paying attention to where's the most volume being traded, what is happening at those levels. So obviously in the next 5 minutes, we start getting a lot of volume being traded here, a lot of kind of confusion going on, right? So even when I go to like a 15-minute time frame after the open, I kind of see something similar where I'm seeing a lot of action happening at this area. This is the area where, you know, we're seeing a lot of traded activity. Then we start going into 45.65. We start getting a lot of aggressive trading activity going on here. And then obviously at 10 a.m., all the trading activity starts shifting. So we start seeing a lot of shift in volume. We start seeing a lot of shift in aggressiveness from buyers and sellers. So when I see that happen, the storyline I kind of get an understanding from is buyers aren't kind of the price that the current stock or whatever the case is at. The buyers or sellers do not agree on that. They do not believe it's a fair value at that current moment. So that's where we start seeing massive shifts in volume, especially when we do go to higher timeframes and higher price points, right? Or lower price points. So that shift in volume that is happening, especially on a big aggressive sell-off, it's kind of giving me the idea that, okay, the buyers and sellers are not confirmed on having an equal or fair price. They don't believe this is a fair price. So that, you know, obviously triggers me to start paying attention to what is order flow telling me. What am I seeing on the depth of market, which is right here, right? And what is happening on the tape? Like, how are the orders responding? Are we seeing aggressive buying kicking? Are we seeing aggressive selling kicking? Are buyers passive or sellers passive? What is actually happening here, right? So now me as a trader, I'm now looking for more clues to confirm my thesis, right? So looking at that and confirming or trying to confirm my thesis, let's just look at the entries and exits so we get a good idea. So my first entry is around 9:54, and then I enter at 10:03, and then I enter at 10:06, just to give it some context, right? I enter here and I start scaling in at these levels. Now, the reason I enter and I scale in, let's understand that. And understanding that goes back to what I was mentioning a few seconds ago, is I start understanding the volume shift and I start understanding how buyers and sellers are responding at these levels. So immediately I have identified that at this level, at the first point, we get a lot of orders stopped out. So a lot of orders get stopped out. Sellers try to push this lower. As sellers try to push this lower, passive buyers come in and drive price higher. So now when that happened, I'm like, okay, well, our passive buyers that stepped in here and that became aggressive, are they able to stay aggressive? Is that a real movement where they're going to drive this price higher above this level that I'm currently watching? Are they present there? Now, when we got here, those buyers were not present. They weren't aggressive. They didn't show up the same way they kind of showed up here. So that put me in a very big, question mark state where I'm like, okay, well, will they continue staying alive here? Now, if the buyers don't show up here, they're not accumulating, they're not being aggressive. Even if I don't see any passive buyers, I start going under the assumption that they're going to fade. And if they fade, we start seeing a slow fade in price. Hence why at 9:56 a.m., I take my first entry. I scale into this position. Now, what I mean by scale in is, I'm not going in full cash. I'm not going in my full position. I go in with 300 contracts right off the bat. And then I add more once price confirms. So talking about price confirming and talking about that confirmation, right? If we go here, 9:54, entry 1, 10:03, entry 2, and then 10:06, entry 3, as I start getting more and more confirmation. And when we look at the footprint charts, or when we look at order flow, we start seeing that big shift. We start seeing where here we are getting the aggressive sellers that start slowly driving this down. Once we get into the zone again, those same passive buyers are nowhere to be found. Now, typically, for me, when I identify areas where there's passive buyers or aggressive buyers sitting in a certain zone, if we get into that zone again, two things are going to happen. Either one, they're going to show up again, orders are going to get absorbed and we start bouncing, right? Or number two, they don't show up. The selling pressure is high. They're not able to absorb these orders, and we start seeing a flush down. So seeing that is what gave me the confirmation to now add more to my position, because I already have a position. Now I'm like, okay, I'm comfortable. Looks like it's going in my favor. Let me add more. I add more to my position, and you guys can see it starts fading down. It starts going below the 45.60 zone. And just to go on a candlestick chart, you guys can see here's 45.60. We start fading down, going into 45.50. We have a little retracement into the 45.60s, and we start fading again. Now, where do I exit? Why do I exit? Let's kind of go through that. So all my exits start kind of accumulating around a similar point, right? I start exiting around 10:15, 10:16, 10:17. So on the chart, we're looking at around here. This is where I start exiting. Now, another thing I want to cover about that really quick is, when you guys look at this around 10:15-ish, when I start exiting, right? This is not the bottom, guys. We kind of go all the way to 45.40. We went way lower. So my contracts probably went up another 50%, maybe another 100%. But as I mentioned before, and as I will mention all the time, my job as a trader is to capitalize on the move that I'm anticipating. If I am anticipating one, if I have an edge, I have my risk placed, capture that move consistently. Hence why I'm able to trade consistently, make a certain amount consistently over and over again. I'm not trying to hit big home runs. I'm just trying to trade whatever is in front of me. And I share that with you guys because when a lot of traders, they see certain plays, they see certain setups, the first thing they try to do is catch a massive home run one time. And I always say, would you rather catch one home run one time, or would you rather trade consistently and catch a small piece over and over and over again, right? And that's why focusing on following your game plan, focusing on, following whatever your risk preferences or risk tolerances is actually followed is important. That will give you long-term consistency, right? Now, as this starts fading, you guys can see this is where things start messing up, and I'll get into that. Now, a few things about this trade. I broke down the stats. I had my playbook. This is the playbook that happened. We had a continuation sell-off. I was at a key level. I was seeing downside structure. We had a weak imbalance. Sellers were in control, in my opinion. Even when we go into here, we can start seeing all the absorptions before pre-market. Before the market opens, we start seeing the absorption. After market opens, we start seeing aggressive selling, and we start seeing a shift in selling. We start seeing a shift in price volume, and we start seeing sellers are in control. Now what happened with me moving forward is I took terrible trades after. So that's the trades I want to talk about as well. So before I jump in that, just real quick, great trade, did phenomenal, happy with the trade. Now where I start messing up is around 10:40, which is around here. This is where I just go on a complete tilt. Because I came off a good trade, I'm super confident, I'm super excited. I let my emotions kind of get the best of me. Now what I start doing is around 10:40, I start trying to go long. I start anticipating that the market may go up for no reason. So when I go to any of these trades, midday reversal, you can see I kind of tag all of them, midday reversal, and obviously none of them really worked. And when I go into like the tags of them, right, biased. I was biased in every single one of them. Right. And now the cool thing here was I scaled in 100 contracts, 100 contracts. I wasn't going in heavy, which I'm happy about. Thank God. Because if I went in heavy here, this would have been a big P&L curve. Right. So go in 100 contracts, 100 contracts, 100 and all of these guys, if you look at these trades, these are like a couple of seconds, a minute, 18 seconds, 46 seconds, 2 minutes, 5 minutes. Like all of them are super short, right? So I go in just trying to catch the bottom, catch the bottom, catch the bottom, catch the bottom. And then finally at 11:15, I try to catch the bottom again with 300 contracts. I size up and I'm on complete tilt right now. And I lose about $5,000. And I'm like, you know what? Let me call it a day. And then I take another trade and I'm obviously finished. So just to go over my trade notes on, how the day was. What I did great, solid game plan, patient, waited for price to give me action, scaled in and out. Mistakes I made, became biased, too focused on catching the bottom. I became super focused on catching the bottom. Reinforcement to myself, should have walked away and reset after 1 to 2 bad trades. I have a rule. I didn't follow that rule today. Should have read the bigger direction downtrend day. I missed the big downtrend day. And I missed a lot of money, by the way. Like look at this. We faded. There was a lot of good opportunity continuously from the first trade I took, and I wasn't able to maximize off it. And my bounce trade had no confirmation. The trades I took here had absolutely no confirmation. I was just on a weird high trying to catch the bottom after I shorted a good point. So yeah, that is my trade recap for today. And, just to wrap it up, my main thing that I want to leave you guys with is every day you guys go into a trading day, have a game plan, have a risk plan, right? Understand what your strategy is. And, as I mentioned in the last video and the video prior to that, I just look at order flow. I try to understand who's in control. If I can read that, if I do have an edge there, I will take a position. Sometimes I scale in, sometimes I scale out. And I start building everything from there. With that being said, I will be uploading a order flow video. I will be uploading a footprint video in the coming week and weeks on. So with that being said, if you guys enjoyed this video and want more breakdowns, please let me know down below. If not, let me know what else you guys want me to start uploading on this channel. So thanks so much for watching, and I will see you on the next video.
Let's go. Last trade, y'all.
Doctor's appointment.
Thanks for watching and listening
hit the
to
gym,
my live session.
got to your to-do list,
Don't forget
eat
to
healthy
hit that
today,
subscribe
take your
button,
vitamins.
like,
Yeah, life gets busy,
comment.
but adding nutritional support, not complicated.
Thanks again for tuning in
One-a-day
to
vitamins
First
are
Amendment
formulated to
Publications
support
Trust.
healthy energy metabolism with B